Hello, I'm Will Hedden and these are your morning market headlines from IG on Thursday the 15th of November. The markets are looking fragile this morning. We've got a 56 handle for the FTSE 100 after a pretty heavy day of selling in the US. We're down 25 at 56.95, although we have rallied from heavier losses pre-market. Now overall the market's still looking very red despite positive earnings, positive sounding earnings from National Grid, Centrica, Antofagasta and also Inventis. They're the standout today, up 4% as they see improved full-year performance. And at the other end of proceedings, Resolution, the insurance vehicle, dampening the market, increased costs from IT modernisation for them, stock off 4%. Now, it's not just earnings to look for in terms of UK corporates today. We're also looking at BP. They've said they're nearing a settlement with the US government regarding the Macondo disaster. No numbers have been mentioned, and as a result, I think this is not getting investors too excited. We're seeing the stock off 0.5%. And then Glen Strata, that is taking another step towards reality today. Qatar, who own 12% of Xstrata, are agreeing to the terms of the 3.05 ratio. That's three Glencore shares, 3.05 Glencore shares for every Xstrata share. Yesterday we were seeing that ratio trading at 2.86. It's been around that 2.85 mark for quite some time. That was the previous set of terms. We're now seeing that move up to 2.91. So the market's starting to move towards the favourable resolution of this deal. Now, Europe headline GDP will be in focus today. We've had surprise growth in the third quarter from France of 0.2%, but they did see a down revision to Q2 with a 0.1% contraction. We've also got 0.2% growth for Q3 Germany as well, and the overall eurozone figure out at 10 a.m. expected to show contraction of 0.2%, and the overall feeling that the figures from Germany are likely to be very negative going forward. We're seeing the euro at 1.2750 currently, having performed slightly better in the last day or so. Now this does bring us to a messy day on the US markets yesterday as the fiscal cliff issue continues. We saw the second term of Obama, his first address yesterday, showing he's still keen for the tax cuts for wealthy Americans to be the first hurdle in negotiations over the fiscal cliff. We saw this amongst other factors pushing markets lower. The Dow closing down 185 as uncertainty continues to reign. We've seen a little rally so far in the futures markets. 125.95 is the opening call, up 25 from yesterday's close. Today we've got inflation data from the US at 1:30, and look out for plenty of analysis on Facebook, defying expectations yesterday, rallying a whopping 12% on the back of, despite the fact that it was the largest lockup of insider shares finishing yesterday, effectively almost doubling the free float in the stock. And we saw in perhaps the last few weeks some reports saying reduction in stock borrowing, mitigating fears that this would have a big negative impact on Facebook shares, but still defying a lot of people's expectations with that move yesterday. So look out for a lot of analysis on that. And that's it from me. Do check out Insight for more news and analysis on the markets.